Somewhere in New York, in the early 1990s, a room full of phones was about to change how financial fraud worked forever. This is the story of a scam so simple and so ruthless that versions of it are still running today. Before the internet, before trading apps, if you wanted to buy or sell a stock, you needed to call a real person. And more often than not, that person called you first. Back then, finding out what a stock was worth meant waiting for tomorrow's newspaper or trusting whatever your broker told you. That gap between what investors knew and what brokers knew was worth millions to the right person. I'm your money guy next door, and today I'm going to walk you through exactly how one man turned that information gap into one of the most audacious financial frauds in American history. Not all brokerages played by the same rules. Exchange brokerages, regulated, watched, accountable. But over-the-counter brokerages, they operated in the shadows, outside the exchange, outside most of the oversight. Small companies that couldn't get listed anywhere else would walk through those doors asking for money. And the OTC firm would say, "Sure, but we keep 20% of everything we raise for you." Any business so desperate it gives away 20% just to raise funds is probably not your best investment. But here's where the story gets interesting. One man looked at this entire system, the desperation, the information gap, the lack of oversight, and he didn't just participate in it, he engineered something far more deliberate. Before anyone knew what was happening, a network of associates working completely in the background quietly bought up large chunks of stock in small, low-value companies, small enough that even moderate buying pressure could move the price. Then the signal was given, and the phones started ringing. Dozens of brokers trained in high-pressure sales calling ordinary investors across the country with one message: "This stock is moving, get in now or miss out." And it worked. Demand surged, the price climbed, and a rising price made the next call even easier. "This stock doubled this week alone. You really want to sit this one out?" This is called manufactured momentum. The stock wasn't rising because the company was valuable, it was rising because the buying was engineered. And once regular investors started piling in, the trap was already set. While ordinary investors were still buying in, the associates had already started selling, quietly, methodically, cashing out into the very demand the sales floor had created. Investors who wanted to sell? Their calls went unanswered. Trade orders lost. The brokers were instructed to stall, to buy time, just long enough for the exit to complete. And then the floor gave way. Once the associates were out, there was nothing holding the price up. It collapsed. Ordinary people lost everything. The architects walked away wealthy. But the scheme didn't stop there. The firm began underwriting IPOs, helping companies list on real public exchanges. And with that came something more powerful than any sales floor: the appearance of legitimacy. Word spread fast. Investors who had no idea what was happening behind the curtain rushed in. That public excitement did the selling for them. No phone calls needed. Here's what made this so dangerous. They combined the unregulated freedom of OTC trading with the trust investors place in publicly listed stocks. One system to build the scheme, another to dress it in credibility. That is the pump and dump. The boiler rooms are gone, the phones replaced by social media and influencers, penny stocks replaced by meme coins, but the playbook? Identical. Manufactured hype, artificial urgency, fear of missing out, then silence. So, the next time someone is really excited about something you've never heard of and they really need you to act fast, you now know the name of that feeling. It's not opportunity, it's a pump. And somewhere, someone is already planning the dump. That's how it worked. And now that you know, you're already harder to fool than most. New video every week. Subscribe so you don't miss it. I'm your money guy next door. See you next week.